Interest rates. Why are they locked? When are they locked? And how are they locked? First off, the rate you see at your initial pre-approval isn't your rate. Possibly the rate was available at the time of your pre-approval, but rates change daily, even hourly, so it's not guaranteed until it's locked. And when it's locked, that's a commitment from the lender to hold that rate at that pricing for a fixed period of time. Why do we lock in the rates? Well, the lenders need to know what your final numbers are. Before they can final approve you and go to closing, they have to know what your payment's going to be to make sure you still qualify for the loan. If you don't lock in your rate and rates jump up before you close and you're not locked, well, you may not qualify for that house. So the lenders have to make sure that's done in a sufficient amount of time to close your loan. Now, interest rates are locked for fixed periods of time. The longer you need the lender to hold that money for you, then the more expensive it gets. It's more risk for the lender because if rates come down, they lose money. If the lock doesn't close, they lose money. Now, when do we lock? Well, for refinance, it's easy. If the goals of the refinance are there at the time of your application, then I would advise to lock and not look back. You may risk not having a beneficial refinance by waiting just to save $1 or $2. Now, for a purchase, typically you don't lock until there's a property. And it gets tricky when that property is a brand new build that may not be ready to move in for several months. We'll talk about locking a new build in a little bit. People ask me, why won't lenders lock in the rate before you have a property? Now, like I said, locking is for fixed periods of time, and if you don't have a property, they don't know when you're going to close. Some areas it may take several weeks or months to even get into contract. Because rates have expiration dates, that rate may expire well before you even find a property. And that costs the lender money. Now, a large percentage of pre-locks, which are the locks that happen before you have a property, don't actually close with that lender for various reasons. But it does cost them money, which is why a lot of them don't do it. And also why some of them, like some builder lenders I've talked to, will charge you up front non-refundable money to lock in the interest rate. When you do find a home, that's when you have a serious talk with your lender about locking. Loan officers watch the market. We follow experts, even though they're never 100% correct. And your loan officer should be able to show you where the market's been, what's changing, and where the trends are. They need to educate you because ultimately, it's your decision, the borrower, on when to lock. The loan officer can guide you, but they shouldn't be doing it for you. So it's important you have these conversations with your lender up front so you know that they know what they're doing. Now, when do you lock in a purchase loan that's not a new build? Well, because the future is uncertain, when you get into a contract and you're closing within 30 to 60 days, that's when I would take a good look at options. And if the numbers look good, it's within budget, then seriously consider locking in your rate. Mitigate your risk because the future is unknown. Small changes in your rate could be tens or hundreds of dollars a month for the exact same house. Now, what happens if you lock in a rate and rates do drop? Well, just as the lenders pay money for their locks to hedge against losses, your lock commitment is a hedge against your loss. However, some lenders will allow a float down or a renegotiation of your lock. It may cost some money, and they may have rules as far as how much the rate has to drop in order to renegotiate, but it could put you in a better financial situation. But policies can change, and there's no guarantees. So don't pick a lender just because they have a float down policy, because it may not be there when you actually need it. Now, can I lock with multiple lenders? Well, in theory, yes, but as a loan officer, that's like asking multiple people to the prom. Ethics aside, lenders have access to data. They can see when you've had your credit pulled, when you have applications with other lenders, and in the case of government loans like VA, FHA, USDA, they can see if you have a pending appraisal order with another lender. A lender could and will suspend your loan until you can document that you've canceled any other existing applications. If you're at the point with a loan officer where you're comfortable locking in the rate, I'd hope you've already gotten to know them, verified licensing and experience, read reviews, and you've already chosen to give them your business. Trust your gut and judgment, take your lender's advice, and then lock your rate if it's appropriate. Let's talk about new builds. When do you lock in an interest rate with a new build when the property may not be ready for several months? New builds have become popular recently because resales, which are homes that someone else already owns and they are selling it to you, are very low in inventory. However, some of these new builds, they may be ready to move in when you find it, but a lot of them are just dirt when you put down your deposit. It's nice to be able to pick out your own finishes and upgrades, but these transactions can take several months for the home to be built. It's rare that a lender will lock in a rate for this extended time period. Many builders don't even meet their own expected completion times. Now, by locking this early with all these unknowns, you may risk losing your lock. Most locks are 30 days, 45 and 60-day locks are available and they may cost a little bit more. And some lenders I work with will lock for 6 months. The cost and the rate may be higher with a long lock, but at least you'll have peace of mind knowing that your payment won't change. Even the builder's own lenders shy away from long-term locks. If your builder's lender does offer a long-term lock, it may not be a bad idea to take advantage of it as a backup. Lock in that rate just in case. Now, a few things about the builder's preferred lenders. Most builders will require you to get pre-qualified with their own people, but they can't require you to use them for closing. The builders may also offer incentives for using their own lender, but there isn't any free money. Often these companies are owned by the same people and they're the same company. The loan estimates I've seen from some of these builder lenders that offer incentives typically will have higher rates and higher fees to make up for the credits that they're giving you. Now, I have to mention that some builder contracts specify the lender you will be using. And if you want to change lenders, you may need to inform the seller and get their approval more than 30 days from closing. So read your contract. You may be 3-4 weeks out from closing, and maybe another lender that you spoke to has way better pricing and they can close in time. You may be past the window where you're able to switch lenders. Definitely shop the builder's lender, but when? I say 45, 60 days out from completion of the home, maybe after the drawing wall goes up. That's when you shop the builder with your favorite local mortgage broker. How do you find your own local broker? Well, I have a video about that. I'll put the link below. Thanks for watching. If this helped at all, please hover over and click the like button. Feeling saucy, then subscribe. And if you think this video will help someone you know, maybe they're looking to build or buy a new home, then please don't be share shy. I'm Michael Wolf. I'm a licensed broker in North Carolina and California, and I'm available for most of your mortgage needs.